Welcome to the Paragon Podcast, a podcast focusing on the needs of high net worth individuals and their families. We discuss the markets, tax strategies, and how to better manage wealth with the goal of living better for today while planning for tomorrow.
Hello and welcome to the podcast. I'm Elliot Mendoza and I'm here with Evan Shorten, from founder and principal.
Hello everyone, thank you for tuning in. If you haven't done so, please subscribe to the podcast. You can subscribe on Apple Podcast, Spotify, and YouTube.
Okay, so it's been a while since we covered Social Security, and we know that's a topic that deserves more attention, as it's one of the most important aspects of retirement planning. So in this episode, we're going to kick off Social Security series starting with a high-level overview of Social Security, and we'll then drill down into more specific topics with subsequent episodes. So with that, what is the basic idea of Social Security and its use?
Social Security is a federal program that provides retirement, disability, and survivors benefits for most Americans. To most people, Social Security is a guaranteed source of retirement income. In reality, Social Security is meant to only represent about 40% of the overall retirement income for the average American. If you're a high-income earner or have built up a high net worth for yourself, then Social Security should probably make up about 20% or less of your overall retirement income.
Here's something that most people don't understand. Is Social Security like a retirement plan that you put money into hoping to get paid back later?
Actually, no. It's not like a retirement plan that you put money into. In a typical retirement plan, like an IRA or a 401k, you make regular contributions into the plan with the expectation that over time you'll earn enough of a return on those contributions, allowing you to draw and live off that money in your future retirement. Social Security is what's called a pay-as-you-go program, meaning today's benefits are primarily funded by FICA, a payroll tax collected from today's workers. FICA taxes fund the Social Security Trust Fund, and from there, the Social Security Administration pays for its administrative and operational expenses, as well as retirement and disability benefits to the existing recipients. The trust fund does try to maintain a certain level of reserves, but the bulk of payroll taxes from current workers is what pays for the bulk of the benefits paid out.
If the term FICA sounds familiar to you, it stands for Federal Insurance Contributions Act. It's one of the payroll taxes deducted from your paycheck, which funds Social Security and Medicare. So now that we looked into what Social Security is, how do you go about getting Social Security when you retire?
Well, the first thing is to qualify for Social Security. In order to qualify, you need to have earned at least 40 Social Security credits. Each year, you can earn up to 4 credits by earning 1 credit for every $1,730 in 2024, or a total of $6,920 in 2024. Essentially, most workers need to work 10 years in order to qualify for Social Security. To see how many credits you have earned or to see what your estimated Social Security benefits at your full retirement age are, you can visit myssa.gov. If you haven't done so already, you'll need to create a new account and log in credentials. Once done, you can log into myssa.gov to view your most recent Social Security statement.
What if you check your Social Security benefit and it's too low, or perhaps you didn't work enough to qualify for Social Security?
There are a few things that you can look into. First, you can simply work more. If you're short of the 40 Social Security credits by a small amount, you can always work a little to earn the necessary credits. The same can be said if you qualify for Social Security benefits, but you feel your benefit amount might be too low. One way to increase that benefit amount is to work more and ideally make more money as well. If you do not qualify for Social Security, perhaps because you're a stay-at-home spouse, you may be eligible for what's called the spousal benefit. The spousal benefit allows you to claim up to 50% of your working spouse's Social Security benefit at your full retirement age. Additionally, if you're a spouse who worked a little bit, but your Social Security is extremely low, the spousal benefit can be combined with your Social Security benefit and get you to 50% of your higher earning spouse's benefit.
So, to clarify, if you're a spouse with a really low benefit, you still have to take your Social Security benefits, and then the spousal benefit will make up the difference to get you to the 50% of your higher earning spouse's benefit.
Correct. Similarly to the spousal benefit, there is what's called the divorce spouse benefit. If again you find yourself in a situation where you don't qualify for Social Security benefits or your Social Security benefit is very low, you may qualify up to 50% of your former spouse's Social Security benefit at your full retirement age. If you were married several times throughout your lifetime, you may even have the ability to pick which former spouse's benefit to apply for. However, keep in mind, there are a few requirements you need to meet if you claim divorce spousal benefits. 1, you must have reached the minimum age of 62, although applying for Social Security benefits at age 62 will result in reduced benefits up to as much as 30%. 2, you need to have been married at least 10 years to any former spouse whose Social Security benefit you apply to receive. And 3, you must remain unmarried if under age 60.
Okay, so now that we understand a little bit more about how to qualify for Social Security, when can I start taking my Social Security benefits?
You can apply to receive Social Security benefits as early as age 62. However, if you begin taking Social Security benefits at age 62, those benefits will be reduced by 30%. In other words, if you log into myssa.gov to view your estimated Social Security benefit, you would receive 70% of the amount shown in your benefit statement. For the majority of individuals who plan to apply for Social Security benefits from this point onward, or who were born in 1960 or after, full retirement age is considered 67 years old. Once you reach your full retirement age, you're entitled to your full retirement benefit. If you choose to delay your Social Security, you can increase your benefit by 8% for each full year you delay, up to a maximum of 132% at age 70.
Okay, so let's say you took Social Security benefits early and then regretted taking the reduced benefit amount. Is there any way to do a do-over?
Yes, in that particular scenario, you have a 12-month window to withdraw your claim. However, you must pay back everything you already accepted from Social Security, including any taxes and Medicare premiums that may have been deducted. If you successfully withdraw your claim, you can reapply at a future date without issue.
So that goes to show you why you really need to plan for your retirement income well in advance of taking Social Security. While it's possible to redo your Social Security election, it's a small window, and repaying all the payments may be harder than expected. It's just much easier to plan ahead by a few years.
It's also important to remember that Social Security benefits receive a cost of living adjustment, commonly referred to as COLA. In other words, your benefit is not fixed forever. It will grow over time in relation to the government's stated inflation.
Now, what are some things that may affect your Social Security benefit? Are there any factors outside of what age you apply for Social Security that can affect your benefit amount?
A big one to be mindful of is the windfall elimination provision. This is a provision in U.S. law that reduces Social Security benefits to people who receive a pension from a job that does not pay into Social Security. A few that come to mind are state and government pensions, typically affecting teachers and railroad workers, nonprofit religious groups like Mennonites, or pensions earned in other countries. The really annoying part about the windfall elimination provision is that it won't be reflected on your Social Security estimate. The reduction of benefits will be calculated at the time you apply for Social Security. This one often comes as a surprise. Lastly, I want to mention taxes. While taxes don't reduce your benefit amount, they may reduce how much of your benefit you keep. First off, most states do not tax your Social Security benefit. However, if you live in the states of Colorado, Connecticut, Kansas, Minnesota, Montana, New Mexico, Rhode Island, Utah, or Vermont, it's possible your benefit may be taxed, depending upon your overall retirement income. Additionally, Social Security may be taxed at the federal level. If you receive income between $25,000 and $34,000, up to 50% of your Social Security benefit may be subject to taxation. If you receive over $34,000 in income, up to 85% of your benefit may be subject to taxation.
Just to clarify what we mean, it's not that your Social Security benefit will be taxed at 50 or 85%, but rather 50% of your benefit may be subject to taxation, with the other 50% not, or up to 85% of your benefit may be subject to taxation, with the remaining 15% not subject to taxation. We know that might sound confusing, and we'll cover that subject of Social Security taxes in an upcoming episode in more detail. This episode was mainly an overview of Social Security, what it is, and how it works. We're sure you may still have a lot of questions regarding Social Security, so in the next few episodes, we're going to provide deeper and more detailed conversations on specific Social Security topics. Additionally, if you have any questions about Social Security, please don't hesitate to reach out to us. You can send us your questions to info@paragonfinancialpartners.com. Additionally, to stay up to date to the podcast and not miss any of the upcoming Social Security episodes, you can subscribe on the Apple Podcasts app, Spotify, or YouTube. We thank you for listening, and we'll see you here next time.
The Paragon Podcast is brought to you by the professionals at Paragon Financial Partners, a registered SEC investment advisor. The topics discussed herein are for informational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities. The financial strategies and guidelines discussed herein may not be appropriate for everyone, as each individual circumstance is unique. Please review all tax information with your tax professional. Please review all legal information with your legal professional. If you have any questions or would like additional information, please visit our website at paragonfinancialpartners.com or email us at info@paragonfinancialpartners.com.